Check this out. So I'm actually in a trade right now. It's up about $1,900. I bought in down here and the market's kind of gone up in my favor really well. And all that trade was based on was market structure. When I started mastering market structure, I was able to clearly read the markets and started consistently making money trading. Instead of it taking you 10,000 hours of looking at charts to learn and understand these concepts like me, it will take you less than 30 minutes. This video will build on itself. So if some of the concepts in the beginning seem super simple, it's because the video will progress and become more advanced, teaching you things that I've only just started to learn after watching the markets for 7 years. I will also show you how to combine all of these concepts into a trading strategy that I have created and that I consistently use to trade profitably every day. So after this video, you're gonna have a clear understanding of how to read the markets and what it's doing with no indicators, and a strategy that you can start consistently trading with right now. So if we quickly look at a real chart now, it's never gonna look super clean or exactly the same. And so just with identifying trends, an easy way I have found to look at the swings is just kind of blur your eyes with when you're looking at the chart, and it'll make it a lot clearer of drowning out some of the noise and where kind of the major swings in the chart are. And then as well, we can to identify the trend and kind of see when it's potentially broken is matching a trend line off the lows here, and you can see it's clearly broken up here. And so from here we would kind of assume that the trend is going to be over and it's going to either start going down or sideways. And you can see here it kind of broke that trend line slightly. And again, that doesn't matter. It's okay for it to break a little bit. And you can see after that was broken, we started to go into a sideways trend. And so all these rules apply for either upwards trends or the downwards trends. And so another big key is you can have larger, broader trends like we were just looking at, or you can have a tight trend like this one right here. You can see there is a downtrend right here with very small pullbacks in it before it eventually breaks. And so this is just called a tight downwards trend. And you can draw kind of a trend line off of it to see kind of that the market's coming down here, bouncing off of this area, and then eventually going lower and eventually breaking that. And then once it breaks that, the trend kind of ends, goes into a sideways trend for a little bit, and then eventually goes into an uptrend right here for a little while as well. And so that's where you can kind of see all three of our trends right here is we have a really tight downwards trend, and then here's a sideways trend right here where the market is just kind of really not doing much. And this kind of trend right here really is not good for trading is when the market is just not moving at all. And so that's something to pay attention for when you're looking at the markets that's a little more advanced, is what do the swings actually look like? Is there movement in the market? Because you can have a downwards trend like this where there's a lot of movement in one direction, but it's not necessarily very easy to find a trade in that type of movement because there's no pullbacks. When you're trading, a lot of the times to enter into a trade, you want to be jumping in when the market makes some kind of pullback, because otherwise you're chasing and it can be a lot harder to be profitably doing that. Or in a sideways trend like we have right here, well, the market's not moving much at all. And so if you kind of trade in here and are trying to make money, the market's not going to move much in your favor. Now, in this scenario right here, if you kind of bought down here and kind of waited it out and it eventually played out great, but sometimes the market can just be moving back and forth for a long time and it just doesn't do anything. Now, another massively crucial thing to trading is support and resistance levels. What these are is a support zone is where the market is going to bounce off of, and a resistance zone is a high where the market is going to reverse off of. And so the idea is if you can identify these beforehand, the market, you can see where the market is potentially bouncing off of, and you can either, when it gets down to a support level, you can buy and bet that it's going to go up. And then when it gets up to a resistance level, you can short the market and bet that it's going to go down from there. And so you can theoretically make money in both directions. And so I've realized that using a zone, like a box like this, is way more effective for these levels because the market does not always bounce in the exact same spot every time. Most of the time, it comes up to an area and bounces in that spot because the market works and moves based on supply and demand. And all that is just saying that, okay, when the market comes up to this level, there's a lot of people that want to sell the market and get rid of either what they're trading or bet that the market's going to go down. And what that does is it puts force and push pushes the market lower, and then eventually that starts to flip. And so when that starts to flip and more people want to buy than sell, that becomes a support level or a demand zone, and the market starts to then go up because more people are now wanting to buy it than sell it. And because of that, there's an imbalance in buyers and sellers, and so it pushes prices back higher. And so that's basically how prices go up and down. And so when something's in a sideways trend, that's pretty much because there is a balance between buyers and sellers. There's not really a ton of buyers coming in and a ton of sellers, and eventually, of course, that'll break, and either a lot of sellers will come in and push the market down, or a lot of buyers will come in and they'll push the market up. And so how I like to draw these zones looking at an actual chart is just looking at the clear swings in the market. Where are the highs and the lows? And in a sideways trend like this, it's very easy to identify those. You can see that, okay, clearly there is highs up here where the market is swinging and bouncing off of, and you can kind of see and take into account, okay, all these little swings up here as well are they're kind of poking into that range or that supply zone, and every time it gets up there it pushes the market back lower. And so anytime it comes up here, you could bet or assume that the market is going to push back lower. And then of course on the flip side, you can see that the market has bounced off of here multiple times, and so again you could make a support zone and assume that, okay, anytime the market comes into this zone, I'm going to buy and bet the market's going to go up, because the market likes to repeat itself. And so it's likely that it does it again. And so some of my criteria for drawing these is I like to see at least 2 swings like this. And so after these 2 swings, I would draw that zone. And so when it came down here a third time, I would assume that the market's going to have some kind of bounce off that level. And then the same on the flip side up here is after kind of these 2 or 3 swing highs up here, I would draw a box. And so anytime it came back up here again, you could kind of assume that it's going to reverse and go back lower. And you can kind of see here, of course, these levels do eventually break. This resistance level that we had up here, the market came up here, it tried to have sellers come in and push it lower, but again, those imbalances will shift and change. And so really there was enough buyers here to overcome those sellers that came in here, and it pushed the market higher and started kind of a new trend. And you can see though, eventually that influx came back in again and pushed the market back down. And so this is how markets move, and that's how I like to draw support and resistance levels. And then if you kind of look further out, you can see either off of big swings like this too, you can draw those levels. And so you can see up here, you could have, off of these massive swings here, you could draw a zone, see, okay, it comes up here again, I'll bet the market's gonna go down. Same with down here, there was kind of 2 swings. And then when it came down here again, you can say, okay, I want to try and bet the market's going to go up. And of course, things don't always work that way, right? Sometimes they're going to fail. And so that's the whole thing about trading. And what we're trying to do here with the charts is give you tools to better predict what the market's going to do. And so again, later I'm going to kind of show you how to use these together to make a strategy and try and take profitable trades off of levels. So a big thing in trading is time frames. And so the key that you want to know about time frames is the further you get down, the more noise there will be, but the more trends and analysis that you can technically do. In a daily time frame, you know, the market could be in some slow grind uptrend for a whole year. And so if you're trying to take trades based on patterns you see, like, you know, waiting for a pullback, that one pullback could take you a whole year to have show up. And so going down into a smaller time frame allows you to again look into some of those other patterns that show up, and you can identify where the sideways trends are, upwards trends, downwards trends, and you can take advantage of all those moves potentially. And so a big key to choosing what time frame you want to trade is really based around you and how you want to trade. If you want to, you know, not have to look at the markets at all and only take a trade once a year, look at a daily time frame and just wait for that one pullback that happens once a year. But if you're wanting to trade, you know, every 5 seconds, go down to a 1 second chart and, you know, watch as the market just goes crazy, right? And so that's of course 2 very extreme opposites. Most of us are going to be somewhere in the middle. If you want to be taking trades every day, generally you're going to be wanting to look at a minute chart. And if you want to take a trade either a couple of times a week or once a month, you know, you can be looking at a 5-minute chart, a 15-minute chart, and really all the way up to a, you know, 1 hour or even a 4-hour chart. And so a lot of that's going to be kind of exploring and seeing, once you kind of understand things and see how the market moves, is looking at those different time frames. But a big crucial thing about time frames is, so for me, I trade on a 1 minute and a 5 minute chart. And so I find trades, a couple of times a week. But the big standout thing that I do is I actually look for my support zones and levels on a larger time frame chart, because of how time frames work is, this is currently looking at a 15-minute chart, is you're able to see the larger structure moves in the market more clearly and kind of see where the swings are, where the potential support or resistance zones are. And so what I do with that information is, I look for my support zones and I look at, okay, there's a pretty good bounce here. It's kind of come down here again. It's got kind of close here. Maybe you can make a zone this big, and then moving the chart forwards, you can see the market comes down and touches it again, right? And so why I go to a smaller time frame chart is, if you look at this on a 15-minute chart, there's not much of a signal here potentially. And so sometimes on a 15-minute chart or wherever you're drawing, it can reverse very quickly. And so going to a smaller time frame chart is because with candlesticks, right? Each one of these candlesticks, let's say like this one right here, that one candlestick takes 15 minutes to form, and it only gives you that one point of data of what that candlestick looks like. If you look at a 1 minute chart, you're gonna get 15 different candles that tell you a way different story of what's going on. And so that's kind of how looking at smaller time frames, it helps you read into the candlesticks, which we'll get to more in a minute. And so, but the biggest thing as well is the larger time frames, again, drown out that noise. And so you can see, again, zooming out, you can kind of see the larger structure of what's going on, and maybe where the more key significant support and resistance zones are, and kind of see, where the market might have a larger bounce off of. And so that's what I found super helpful. And I think a lot of other people that have kind of taken that style from me as well find that very, very helpful with drawing larger time frame supports and resistances for their trade. Now, in the beginning, when you're looking at charts, is what you're doing is, again, you're just kind of looking at the swings in the market, right? Okay, where are the highs, where are the lows? But what you can do is, as you get more fluid with that, is starting to look at the velocity of the swings and how they have played out to the previous ones. And so if we look at this trend that we've already looked at before, where we kind of drew our uptrend line, is look at the swings that the market has had here and the pullbacks. And so every time the market kind of came up here, it had a pretty good pullback. And then once we kind of got into kind of this area, is it started to not look so clean anymore. It started to slow down. And so over here, there was clear, clean moves up. And then over here, it started to kind of just start to get choppy. You can see that there's a lot of candlesticks kind of next to each other, which just, again, on a smaller time frame, if we zoomed even more, would kind of look like this. It would be a sideways trend. And so the market's starting to lose some momentum. And so as we kind of get higher here, it's really not moving that much in this section right here. And then of course you can see we have a massive breakout here. And if we actually look at, you can draw channels as well. And all a channel is kind of just looking at the upwards side of the uptrend. Sometimes what you can have is things will just match perfectly. I don't really use channels very often, but sometimes they just match really well, where you can see, okay, well, the support side, or the highs and the lows, are kind of just bouncing off of a level almost perfectly. And here you can also almost even realize that, okay, this upwards trend or channel breaks sooner than when it broke the support level over here, because it broke this upwards area way before. And so it broke that and then started to go into a sideways channel here, or trend line. And then we had kind of a big sell-off, and then, it broke the support side of this trend or channel, and the trend shifted from there. And so just because, yes, we're in an uptrend and, well, this keeps the uptrend going, how does that kind of signify that the trend is going to shift? What happens here is the trend has changed significantly. Before, we were kind of in a nice predictable trend, and here it started to go parabolic and over correct itself in a way. And so what happens is, I like to call these exhaustive moves. Essentially, the market kind of does a sprint at the end, to hit the finish line, you could say, and it just runs out of steam. And you can see right here, that balance comes back in, where, here there's a really big imbalance with a ton of buyers coming in, pushing this up really fast. And then a balance happens where all of a sudden, a lot of those buyers dried up. It starts going sideways. And then those buyers dry up even more. and the sellers take over and they push the market back down here and push it back down to, you know, kind of where it started that initial sprint. And so this is something pretty big that I have noticed a lot of the time. Just to show you another example of that is the market kind of is in a sideways trend here, a little bit of an uptrend, and then it just starts this massive downtrend right here. And you can see it starts to level off. It starts to lose that momentum. Just looking at this line here, it's less vertical as we kind of continue forwards here. And then all of a sudden, you can see that it's almost going flat here, and then boom, all of a sudden it just rips lower, doing that final sprint that we just talked about. And then you can assume after that, it has a massive reversal and it gives back that sprint that it did, or exhaustive move that it did pretty quickly. And then from there, the trend's over and it goes sideways. You know, I don't know what it does after that. It probably reverses that some. It looks like the trading day ends right here. But, you know, again, you can see here kind of a bigger picture. It goes down, accelerates, and then reverses really quickly and kind of ends that trend. And so that's what you want to start doing, is looking at the pullbacks and the swings of the market. You know, what is the overall velocity of it? Are the pullbacks getting deeper, you know, signifying a potential slow in the market? Or are the candlesticks just starting to sit and chop all over each other? And so a big thing that you can start doing is you can start to sometimes read into the candlesticks a little bit more. And so the biggest thing to remember is you'll see chart patterns and sheets like this, essentially cheat sheets of chart patterns that have a ton of different names and different patterns. All of these patterns right here are reversal patterns, and you don't need to memorize all these patterns and, you know, create flashcards. The biggest thing is to learn to read into what they're telling you. If you can kind of, again, look at the velocity of the market and what it's doing, you don't need any of these patterns. And so all of these patterns are telling you that there is a switch or loss in momentum. And so if we just look at this bullish engulfing candle pattern right here, is that all it's telling you is over these 6 candlesticks is that the market, based on these red candlesticks, the market sells off. It starts to kind of slow down. You can see that these candlesticks are getting smaller. There's less movement down. And then all of a sudden there's a massive switch in momentum. It had that kind of exhaustive move probably if you kind of dived into a smaller time frame and looked at what happened in this candlestick, and then it broke the previous candlestick and made a new high. And so that kind of maybe looked like this, and then you can see it starts to switch into an uptrend. And if we go to a completely different random one, you know, on the flip side, this dumbling top, I've never even heard of that name before, but all it's telling you is, okay, the market kind of sold off here, and then these 3 candlesticks just show you again, the market's going sideways. It's lost that momentum. And then all of a sudden, boom, bullish candle comes in and we're switching momentum and the trend's going up. That's, again, the biggest thing is these are just smaller versions of what we just looked at. They're just showing you, okay, the trend's coming down. It's losing that velocity. Maybe sometimes it has that kind of exhaustive move where it kind of reverses and rips higher from there, or it can just have what it has right here where it just kind of slowly peters out. That balance comes in with the sellers and buyers, and then the buyers take over and the sellers dry up and it moves higher. And so that's all you're having to look for with looking for reversals in the market when you're trading. You don't have to try and memorize all these different patterns because, again, all of them tell you the same thing, just in a slightly different way. This goes for the exact same way with market patterns. There's so many market patterns in trading, and you don't really need to memorize them or learn them because all they're trying to tell you is what can happen after there is a break in momentum or switch in momentum. And so like for one, like here, the head and shoulders pattern is usually a reversal pattern. And that's, I would say, is my favorite pattern, but it's pretty much just because of market structure. And so all that pattern, how that pattern works is, if just quickly looking at a chart right here to show you one in hindsight first, before I show you one on a real trade, is all it shows you is it just looks at these swings in the market. And so all a head and shoulders pattern is telling you is in a downtrend, well, it's eventually going to switch to an uptrend, right? And a head and shoulders pattern is literally just this section of that chart right there. A head and shoulders pattern just is looking at, okay, when do the swings start going from making lower highs and lower lows to making higher highs and higher lows? And so that's all that's looking for is essentially when is there a shift and switch. It's just looking for when the bottom is. And so the big confirmation is right here is when the market makes a move up here, pulls back, and then continues higher and makes a kind of a higher low right here. And looking at an actual chart here, you can see here's a downtrend, and then the market makes a low here and then a higher low, signifying that this low is higher than this one, and it starts an uptrend. And so that's how you look at head and shoulders patterns. And again, it's just looking at that market structure. That's all these patterns are. They're essentially cheat sheets of what might happen once this happens. But if you can learn to just read what's going on, you don't need to understand any of that. Now, one thing to remember with these patterns is just because one happens or a pattern says it's going to do something does not mean that's going to happen. For an example, here is a classic bull flag pattern. Essentially, all it means is the market's kind of gone up and it started to lose momentum. And a lot of times these patterns and cheat sheets will say, well, that's a continuation pattern. It's going up and it's just consolidating and regaining momentum, and it's going to continue higher. A lot of the time that means it's losing momentum, just like we've been talking about. Is it comes up, goes into sideways, and then reverses lower, and the trend switches. Looking back right here is the market is going up and up and up, and it starts to go into sideways, and that's kind of a bull flag right there. That's how that pattern works. It just looks like a flag, and bullish just means it's going to keep going higher, right? And here, well, it's just lost momentum, and so the trend shifts. And so one way I like to try and make sense of how do you know when that's going to happen? How do you know if it's going to reverse here or if it's going to keep going higher? Well, a big thing I like to use is it coming into a support or resistance level. And up here, I've drawn a resistance level. That's what this box is. It's coming into a resistance level, so it's likely to reverse. And so that's a big thing we're going to get into is adding these things on top of each other, is taking into account all of these things you can make a trading strategy out of, because you're learning how to just read the market. You're learning what signifies, what adds on top of each other to signal what might happen. And so this trade down here, that's how I entered in, is looking at the market kind of had a downtrend right here, and then it started to lose that momentum, and it went into a bearish flag pattern technically. But for me, again, I'm not looking at that pattern. I'm just saying, okay, the market had some big momentum down here, and we came down to a support zone I previously drew. And then from there, it lost that momentum and started to reverse. And so I jumped in betting that the market was going to go up. And from there, it just kind of played out just to kind of zoom forwards a little bit. And I caught, kind of a swing higher, making a nice good trade. And so that's all you want to be doing with trading, is adding these things on top of each other to make a strategy. And so another super clean example is this trade right here. Is you have a head and shoulders like we were just talking about. You can see that we were in an uptrend, kind of looking at the swings, and you can even just see we're starting to lose that momentum, right? We're losing that momentum. We've actually made a head and shoulders pattern right here. And then another thing is, well, here's my resistance zone, that box. There's an uptrend that I've drawn right here. That's pretty clearly broken. And then as well, kind of looking at just this swing, well, we had kind of some clean moves here, and then here's that kind of exhaustive move. So the market kind of made that final sprint, started to lose that momentum, another kind of final sprint right here with this last little candlestick. And if you actually look, these three candlesticks right here is a candlestick pattern. This pattern called an evening star is a reversal pattern, and all it is it takes these three candlesticks, and the idea is there's a really strong bullish candlestick, a doji, which is pretty much just no movement candlestick, and then a really big bearish candlestick. And that happens exactly right here. We have a strong bullish candlestick, a doji where the market really doesn't move that much, and then a really big bearish candlestick. And if you think about it, all that is a micro version of our trend analysis of what we have going on right here. We have a big bullish movement followed by kind of a doji, and then potentially what we have next is that big bearish candlestick or big movement down of the market reversing and losing that momentum. And so that's how I like to trade, is it's essentially finding all of those things in a domino effect style. You're gonna have this three candlestick pattern right here of this evening star is the first domino of this trend reversing. These three start the market reversing down, and then you have this bigger version that is going to potentially start reversing it down as well. And then that combined with all these other things that we're using, the the resistance level up here, the trend broken to kind of confirm that we're starting to shift and lose that momentum. And then again, as well, just looking at that trend starting to sideways. And from there, the market plays out kind of exactly that way. And so that's pretty much how I just enter into trades, is using pretty much everything we've just talked about. And that is about it. I don't use any indicators or anything. I just look at for when the market is looking to make really clean reversals. And again, I'm trading on NinjaTrader, which is the platform. I am trading futures, but you can really trade this on any market you want. And as well, I'm trading right now on a 1 minute chart. This is a 1 minute chart, and I found the resistance level up here and the support level down here on a 15-minute chart. But again, I have students that use this on an hour time frame, a lot of different other time frames. And again, it's about finding what works for you. And so with this trade, it played out exactly as we were just talking about, is it had that kind of doji up here and made a massive reversal and closed out for a really big win. So now let me walk you through kind of start to finish of this strategy, and actually on a different time frame. Again, showing you that you can do this on multiple time frames and actually different markets as well. The first market I was just trading was the ES futures market, and this is actually the oils futures market. Now, the only reason I trade futures is because I've just found them really easy and they give you a lot of leverage compared to other things in the market. Again, you can trade this on any market or time frame you want. I have a lot of students that just do it however works for them. Again, trading is all about finding what works for you and your schedule. But for me, this is what works for me. And let me walk you through, hopefully, what will work for you as well. And so for this, I look for a level on the 15-minute time frame. To show you the exact level that I took for this trade, if we look at a 15-minute chart of oil futures, this is what the market looked like right before I jumped into this trade. And so here, the market was just kind of going sideways, and then it sold off from here. And so when we came back up to this area again, this is where the market was trading when I entered in on this trade. I thought that, well, you know what? This looks like it could be a resistance zone. I want to pay attention to it. And if my checklist and everything I'm looking for to enter into a trade shows up, then I will happily jump in, bet that the market is going to reverse off this area and I can catch a good profit. And so from there, I looked at a 5-minute time frame and waited for the market to come up. And so the market came up into this level. The market for me, because I'm on the west coast of the United States, opens up at 6:30 my time. That's kind of when I start trading. Now, technically oil is open before that, but that's when the US market opens. That's when a lot more movement starts to happen. And so from there, I just looked for my checklist. And so to go through that is the first thing is waiting for it to come up to that support or resistance level. And so we've already kind of looked at where that was from. And then the next big thing, of course, is making sure that this uptrend that is in is broken. Because of course, if you're reversing and betting the market is going to go down here, you don't want to bet that the market's going to go down before it breaks that trend, because that it could just keep going higher and we could have got in on a bad spot, right? And so the next thing is reading into some of those patterns that we were talking about. And a big one is kind of seeing that this candlestick, it's a little hidden right here, but this candlestick shows you a massive movement up here and then it kind of comes back. And so for me, looking at a 1-minute time frame, actually that looked kind of like an exhaustive move of the market coming up and then selling off. And then as well, going back to kind of that, looking at the swing highs of the market, is as the market's higher and higher here, you can see that head and shoulders pattern that we have right here is the highs are continuing to gain higher and the lows are continuing to gain higher. And then all of a sudden we have that switch, is the lows and the highs start to get lower. And so once that happens, that's kind of my final confirmation that, okay, we are definitely getting that kind of loss in momentum. And just overall, if you just look at, kind of blur out the overall momentum of the market, is that it's starting to shift and lose that momentum. And the market can totally sometimes come up here and just sit here and do nothing. Or it could come up here and sit here and then keep going higher. But trading is all about finding when the probabilities are in your favor. It's just about playing the numbers over time. You're not going to win every trade, right? And so that's a big key thing with the strategy. Is another thing on the checklist is, do you have a good risk reward ratio? And so I'm not going to get into a crazy amount into risk reward in this video, but I like to go for, if this is my risk, in this trade I was risking about $600, I want to be able to get multiples of that. And so I like to be able to get, generally, if I look at, well, the market could probably come down to this support zone down here where the market kind of took off before. This is my kind of risk right here of $600. And down here, right here, if the market's down here, that's kind of 1x. Here is 2x, 3, and then you have 4 all the way down here. And so that 3x is $1,800. And so you're risking, 600 to make 1,800 or 1 to make 3. And that's a favorable risk reward ratio. And you can see here, the market's coming against me pretty good for a while before it eventually starts to work out in my favor. And so to kind of speed it up here, because I'm trading on a 5-minute chart, this plays out over a longer period of time. And so that's another thing with higher time frames is your trades are going to last longer. If I take a trade on a minute chart, I'm probably going to trade for maybe half hour, sometimes an hour, or even sometimes 5 minutes. But on a 5-minute chart, this trade in particular went for about 90 minutes. That's a long time to be in a specific trade. And so you have to figure out how to deal with that. And so the last thing before we jump into talking about that more is how I jumped into this trade. What was the final confirmation? And the final confirmation was when the market made this 2 candlestick pattern right here. I was waiting for, it to kind of confirm that lower high in our head and shoulders pattern. And these 2 candlesticks did that. And why they did that, if we kind of look at this in a more clear version, is the market comes up, makes that super big high, and then right here it kind of sells off again, and then those 2 candlesticks, we kind of draw them right here, as the market comes up a lot and then reverses. And so this big red candlestick kind of is right here at that close, and for me it essentially confirms this head and shoulders pattern. It confirms that this is a lower high than this one. And so that's how I jump in on the trade right here. It kind of closes and confirms. And so I put my stop above that swing high because my idea is, well, I'm kind of going off of the market structure, right? And so if the idea is that this is going to start a downtrend, well, I don't want it to break that swing high, because if it breaks this swing high right here, well, it's probably either going to go into a sideways choppy trend that is not worth trading because there's just not going to be good movement, or it's going to start into an upwards trend and I'm wrong and I just move on to the next trade, because again, the math plays out in my favor. I don't have to be right very often to make money if you're risking 1 to make 3 a lot of the time. And so from there, I just wait for the trade to go in my favor. And so from there, you can see I just switched charts. And so I switched to a 1-minute time frame, and you can see that there is a very, very tight downtrend happening here. And so that's how I like to manage my trades, is once I get to about 3 times my risk, is I see what the market's doing. And in this case, the market is in a very, very tight downtrend. And based on what we've talked about is, well, once that downtrend breaks, it's likely that the trend reverses, right? And so I want to get out there, take my profits, and kind of move on to the next trade. Because of how fast this moved down, it could reverse very quickly as well. So one big important thing that I haven't talked about in this video is timing. I've recently discovered a time in the market where it's more likely to reverse. It's essentially another catalyst and another part of my checklist. And so if you want to learn more about that timing in the market, check out this video right here.